a 12.39% premium. Shanghai pays 82.20. COMEX trades 73.14. That is a $9.06 gap. That spread exists 2 days before delivery. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, May 1st notice day arrives in 48 hours. Let's get straight into it. Lead story today. COMEX May 2026 Silver Futures. 17,184 contracts remain open. That equals 89.9 million ounces. Registered inventory stands at 77.1 million ounces. Effective April 24th data. This follows steady April vault outflows across multiple sessions. The unusual detail is the simultaneous divergence. Western paper price declines while Shanghai physical holds strength. The timing is what deserves scrutiny, not the event itself. The timing. Think about what that sequence actually means. A delivery window approaches while physical demand signals strength. That is not alignment. That is tension. If delivery demand materializes, inventory faces immediate stress. If it does not, the structure resets temporarily. Which side resolves first? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. Coverage ratios below 15% rarely persist without volatility. The current ratio sits at 13.4%. The data is already telling you something. Let's build it out. Now let's build the full picture because COMEX delivery pressure does not exist in isolation. CME Group open interest data shows 575.5 million ounces outstanding. COMEX warehouse reports show 76.8 million ounces registered inventory. That creates a 13.4% coverage ratio. For every ounce, 7.5 claims exist. Shanghai Gold Exchange prints $82.20 physical pricing. Trading Economics records 73.26 COMEX spot during the same session. That creates a 9.06 divergence. In a single day, COMEX declines 2.95%. Shanghai pricing remains elevated. That is not convergence. That is divergence. National Gold Group reports April vault flows. Between 1.8 and 315 million ounces leave eligible vaults in single sessions. Some inflows show as low as 5,000 ounces. Year over year, registered inventory trends lower. Open interest remains elevated. The rate of drawdown is not slowing. It is accelerating. The data is doing the talking. The ones who were dismissed for tracking physical tightness are not saying much right now. And here is what makes that picture even harder to ignore. 89.9 million ounces remain eligible for delivery. Only 77.1 million ounces are registered. At the same time, macro pressure suppresses paper pricing. Dollar index trades near 98.5. 10-year treasury yields range 4.32 to 4.36%. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups can take a long time to resolve. What this tells you is the structural imbalance. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. 4.36% yield on the 10-year. That is the cost baseline. Now macro policy, because this is no longer a backdrop, it is the primary variable. The dollar index at 98.5 strengthens global pricing pressure. Treasury yields above 4.3% increase opportunity cost. Federal Reserve decision arrives April 29th. That timing intersects directly with first notice day. That is the math. A stronger dollar reduces international demand. Higher yields reduce non-yielding asset appeal. Markets are still pricing continued tightening pressure. Look at Shanghai paying $82.20 and tell me what probability you assign to weak demand. When markets reprice the reality of sustained physical demand under tight policy, silver reprices upward, gold follows directionally. Industrial metals adjust input costs. That is the historical pattern. Every time physical demand diverges from paper pricing into delivery windows, it has not been different yet. Silver Western Spot at $73.14, Shanghai Physical at $82.20. That is a $9.06 premium. Short-term picture remains conflicted. Paper pricing reflects macro pressure. Physical pricing reflects demand strength. The key event is first notice day. If large contract holders stand for delivery, inventory stress becomes visible. If longs roll into July, pressure defers. If delivery demand increases, silver moves toward $85 to $90. If rolls dominate, price tests $65 to $68 support. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. Current conditions show conflicting signals across markets. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. Dollar index at 98.5 reduces global demand. Treasury yields above 4.3% pressure silver pricing. Longs rolling contracts reduce delivery stress immediately. The bull case is equally real. Shanghai premium at 12.39% signals physical demand strength. Open interest exceeds registered inventory by over 10 million ounces. Vault outflows exceed inflows across repeated sessions. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one conclusion. Structural pressure exists before delivery. The only question is timing of resolution. Don't take my word for it. Verify every number I gave you. Check the data yourself. CME Group, Shanghai Gold Exchange, COMEX Warehouse Reports, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for confirmation. They already know. OG John AG 1.0, out.